What is the typical course of action when an account increases in value? Let's say it's gained 10 or 15%. What is the course of action at that point?
Well, if an account goes up in value past a certain, commission threshold. Commission threshold is about 5%, right? So if something goes up 5%, then you can charge the client 2-3%. He still makes a profit. That's what you really care. You show him a little profit, it looks beautiful. You know what I mean? So as long as it's past the threshold, if an account's up, or a position, a stock is up 7%, 10%, 12%, you rarely see 20, 25. Because 15%, you have a reason to sell. We call it locking in profits. If you ever had a broker, you're very familiar with the term, if he's ever made you any money. Locking in profits, it means, as a broker, you're sitting there going, okay, this guy's up 15%. If the bell rings at 4 o'clock tonight, and I don't sell the stock, I can come in tomorrow, and this can be back down in the pre-market before I can even sell it. It could be down already, for whatever reason. And now this guy's going to be up only a little bit. So what I want to do is I want to lock in. I want to show him that I can make him profit. Show him how great of a person I am. I'm going to call him up and say, John, we made 15%. We're not looking to hit a home run here. We're just going to get on base. We're going to put a man on first, man on second, man on third. We're going to chip away. You know what I mean? We're going to hit this tree a couple of times until it falls. So we're going to make 10, 15% here, 10% there. And this has been something that has worked for me and my clients for years and years. Trust me. Well, you're not going to buy that story? Of course you're going to buy that story. Say, yeah, sure, sell it. What are we buying? You think a broker doesn't know where he is? Well, a broker knows what we're going to buy in the spot. What is it? XYZ Corporation. Why? Because this is happening. And this is obviously great. And since you just made your client some money, he trusts you, he doesn't question, he doesn't care. Yeah, buy it.
Okay. And you mentioned leveraged ETFs. Those are very volatile instruments. They tend to carry a higher risk level. Is that mentioned to clients when it's being proposed to them, or is that something that clients are unaware of?
I mean, just like margin, it's mentioned in a more positive light than a negative. You say, this particular ETF that trades like a stock, it's extremely liquid, but it's a fund that holds many different things. And it tracks the performance of this, times 2 or times 3 leverage. So if this goes up 7%, we go up 14 or 21. And this can happen overnight. This just happened 3 days ago, and last time this happened, this went up 15%. I think the same exact thing is going to happen. Let's do it. Let's do it now. Purchase. Okay. Obviously, that ETF can go down just as much because whatever it's mimicking is not performing. And there's also a decay issue where obviously that fund, that ETF, has to make money also. So it's going to eat away at your profits every single day, a little bit. It's decay. If a broker doesn't know it, know about that, it's because it's in the prospectus and I've never seen a broker read one. But if you're going to venture into something like that, I think you should know exactly what the instrument is before you buy it. So I think it's very important. Financial education is really, really important, whether you're using a broker or not.
You mentioned leveraged ETFs. Many of them are designed to be held for one day at a time, and it needs to be bought and sold intraday.
Right.
Is that something that's done in people's accounts? Are the positions cleared out at the end of the day, or how does that work?
Most of the time, no. You want to hold it overnight, at least over one night. Some brokers, sit in it for weeks, months. People don't know about it, but you don't want to day trade, for example. Unless you have a day trading disclosure, it's a whole, it's a whole liability issue that you don't want to have. Usually brokers, they don't want to hold it for weeks or months, but they want a quick gain. So let's say I'm going to buy it today hoping to sell it tomorrow because I think the market's going to be up 120 points and this is going to make me go up 6%. If that happens. Obviously, tomorrow you wake up in the morning, futures are down, oh my God, you're on your way to the office, you're reading articles, Bernanke, this, guy, that, oh my God, so you come in, the market opens, bell rings 9:30 in the morning, you're down 4%. You're like, okay, should I cut losses or should I hold it? You don't want to show your client a loss right away, overnight, so you hold it. Maybe tomorrow it bounces back up. Maybe not. Whatever. If the client's down 15, he's down 15. If he's down 20, he's down 20. You call him on the phone, you say, listen, we need to buy more here. Even if you don't believe in the idea anymore, you call your client because he believes in it. And that's what you have to do.
Right. So even if someone loses money in their account, basically, would you say that the strategy is usually changed to something else? Or do you buy more of the same security to sort of lower the cost basis?
You always try to lower the cost basis first, because this way your client sends more money, which is more money that you can charge percentage of. You know what I mean? Sure. If your account is 100,000, it goes to 90. I can only charge you 5% of 90. But if at that point I say, listen, send me another 80, and you say, and I say, all right, fine, at least send another 40. You say, okay. Now I get to charge 5% of a bigger number. Okay. So obviously we want to take or extract as much funds as possible from it. If you don't have it in cash, we're going to go, okay, what other portfolios do you have? Do you have bonds that we can sell, mutual funds that we could sell, anything? Oh, you're up in this? Yeah, you're up. Listen, lock in profits. Listen, use it to fund this. I mean, this is something you believe in, I believe in. We already bought a little bit. Let's lower our cost basis. People believe in it, and that's what you do. After a while, obviously, you lower cost basis and you lower cost basis. A stock doesn't work. It doesn't perform because nobody wants to buy it because it's garbage. So not to use more colorful language. And obviously the stock never goes back up. And eventually you call your client and say, listen, this isn't working as much as we thought it would or we were hoping it would, but we have a great idea here. I think we're going to make some of this money back, right, with this one. So we're going to sell that one and we're going to buy this one. And I'm not going to charge you a commission on that. Charge you a markup.
Right.
We obviously don't tell the client.
Can you talk a little more about markups and how they're different from commissions?
Sure. Markups are commission in disguise. Okay. Basically, let's say you purchase ABC company at $100 per share. Okay. Instead of me charging you 4 or 5% commission, I'm going to charge you a markup. So on your statement, you would see that you purchased the stock at 100. But your cost basis is 104.37. So I just charged you $4.37 on the $100 stock, which is a percentage, right? So the client sees it as a cost basis and goes, oh, okay, well, I own, in my head, I own the stock at 104.37, where it really is, we bought it at 100, and I keep the spread. That's a markup. I marked you up, okay? Works backwards, also markdowns, but basically the client doesn't see it as commission, doesn't encompass commission. Sees commission 0. Oh, great, my broker didn't charge me anything. Right?
So even though there basically was a compensation element there, it's just not as obvious.
Of course. Obviously, some clients are smarter than others and they'll question it, and the broker will explain it to them honestly. Oh, listen, this is a markup, I charged you. Whatever. Some are more honest than others. Nothing personal, but it's another tactic to get paid without the client really knowing.
I hope you enjoyed this part of the interview. Stay tuned for the next part for more valuable insights into the brokerage industry.